All right, welcome everybody to the 27th episode of the AdvisorTech Book Live podcast. My guest today is Ryan Eisenman of Arch. Welcome, Ryan.
Thanks, Joe. Excited to be here.
Sweet. Um, yeah, glad to have you. It's funny.
My, my,
I said
my
sweet.
only
I said sweet the other day, and my wife was like, "Hey, that's not the right response when someone says they're glad to be there." So I was like, "I got to work on that response."
I'll take sweet. Sweet's good. It's kind of like it's friendly. Also, I realize you have a hat on. My biggest regret is we have these Arch hats, which we give to all of our clients, and we sometimes give out at conferences. And I should have brought my Arch hat. So next
Yeah,
time.
no, it's fun. I'm not usually a big hat guy, but at certain times of the year, I like wearing hats, and so this happens to be a time of the year. So cool. So, do you want to tell us a little bit about your background and the company Arch, and then we'll talk about the category and maybe more specifically private markets and how you help with that.
Yeah, for sure. Originally from Texas. I live in New York City today, where Arch is based. We are an 8-year-old software company founded by myself and two software engineers, Jason Trigg and Joel Stein, in 2018 to make private markets more accessible. The big pain point that we were solving at the beginning, and still the pain point we're solving today, is for those that invest in private markets, whether it's an investment advisor, an institution, a client, it's really painful. You have to go into all these different platforms. You have to collect PDF statements. You have to read the statements and put data into your Orion, your Tamarack, your Adapar type of system. You need to collect tax documents to get them to accountants. And it's a lot of work that is automatable work. So we built this platform starting in 2018 to give advisors, clients, and their accountants more time back, but also dashboards of their investments to make private markets accessible, understandable, and easy to manage.
That's great. So I was looking it up on the Kits map, and it looks like you guys are in the account aggregation category, which I think is probably not exactly the best category to be in, but I think it. What do you? Are there comparable companies that people might be familiar with that do similar work to what you do?
Yeah, and the reason why we put ourselves in the account aggregation category when we first joined the Kitsies map, this was probably like 3, 4, 5 years ago at this point. And by the way, like Kitsies has done an amazing job. We are stoked to be on the map. I think that was the title of like the post. Like you might have posted about it on LinkedIn and been like, "We're on the map. Like we're a legit company that advisors can buy." But it seemed like what we were doing was similar into a lot of ways to what like a Plaid, a Buy All account, some of these other companies have done within public markets, but we're bringing it to private markets.
Sure.
Over time, we've evolved to be a little bit more of like the Schwab headspace for private markets, meaning you log into Schwab or Robinhood or Fidelity to see all your positions, how they're performing, have your tax information consolidated. And it's like the source of truth for publics. We, for our clients and for the advisors that use us, become the source of truth for privates. You log into Arch, you see all your positions, you see how they're performing, data is exportable to other systems, and your tax information is consolidated.
So with this, like, they're not required to report this. So how do you kind of compile that data to show like performance over time with a private investment?
Yeah. Well, they do share this information today. If you look at like a Blackstone or Carlyle or KKR, and you these private equity funds or hedge funds or other types of private asset managers, they do send information, but mostly sending information means we have PDF statements that say, you, John Adams, invested $100,000 in this investment, and today it's worth $120,000. That information is locked in a PDF, and then it's posted to a portal, which is basically like a less user friendly version of a Dropbox.
Sure.
So the information's out there. It just needs to be pulled out of the portal, pulled out of the PDF, and then made sense of. And we do that work for our clients.
Okay, that makes sense. And then what type? So like, as you move up the net worth range, like what types of clients are starting to invest in alternative investments typically?
Yeah, we're starting to see really this democratization of alts across different client types. And so you have folks that are mass affluent and are doing really well. And maybe 5 years ago, they wouldn't have invested in private markets just because uh, the large private equity firms weren't catering their products to them. Now today you can buy some of these exchange traded products or evergreen structures or other um, types of alternative assets. And it makes it accessible to someone that wants to write a 25, 50, $100,000 check, where before you needed to have $1 million or $5 million potentially to invest in these types of products. So we think that that's net good for the market. We think it's great for products to be accessible to folks in lots of different asset types or in lots of different structures. So we're excited to see that flourish.
Do you know maybe the breakdown between publicly available investments versus privately available? Like, is there a trillion number or something between the two?
Yeah, knew this a couple years ago when we were quoting these numbers, um, but I think it's something like 70 to 80 trillion of U.S. public equities, and then alternative investments are somewhere in the like 25 to 30 trillion range. And these
Okay.
numbers are constantly changing. Markets go up and down, um, but public equities are maybe like a 3x bigger market, but they're in the U.S. equities versus just like alternatives in general. But alternatives are growing, and it's still a massive market that has historically been mostly an institutional market. But there's also a pretty interesting thing where, with the dynamics within endowments specifically, a lot of endowments can invest in venture right now because they're overweight private markets.
Okay.
And also with like some of the headwinds with taxes and other things affecting endowments. So net new flows into private markets are coming more from the wealth channel than ever before.
Okay. So coming through financial advisors, basically, so they're recommending these private investments to their clients.
Yep, exactly. Whether it's RAs, banks, outsourced chief investment officers, there's a lot of advisors that are supporting clients in their entree to private markets.
So why would they invest in a private? Is it for diversification, for maybe higher potential returns? What are some reasons to invest in private markets?
Yeah, hit it right on the head. Both are two of the key drivers. Diversification for sure. You're investing in something that isn't marked to the market every day. You're getting access to a different asset class that's hard to access via public markets. That is hopefully non-correlated with how public markets are performing. And then there is this promise of, okay, if the S&P delivers 7% or 9% a year, private markets maybe can give me 11, 12, 13% a year. So if I have a long duration, if I'm willing to be in the market for a long time, having some percent of my portfolio being in private markets might lead to me having a better return over a 5, 10, 20 year time frame.
Yeah. Are you able to break down? So I know there's like venture capital, growth equity, private markets. Like what types of like what is the risk for these types of investments? Like, are some of them pretty safe and comparable to like the S&P 500? Are some of them more like venture investments and like 90% of them will go to zero? Or what's the or is it all the above?
Yeah, great question. So there's a lot in that question to potentially unpack. One is just diversification in general. When you buy the S&P 500, on one hand, you're getting a basket of 500 stocks. On the other hand, that basket of 500 stocks is market cap weighted. So you're getting a lot of that magnificent seven. So you're actually like pretty exposed to tech names and potentially to some of the AI boom, AI bust, AI bubble, whatever you want to call it. um, so that carries, I think, more risk than people understand today. But granted, like public markets, you can get through ETFs pretty diversified views of different parts of the market. So there's a lot of options there. And with direct indexing, there's like even more options today. Within private markets, you have to look at each asset class. It's like if you're investing in venture, any one particular company that you invest in has a very high percentage of going to zero. If you invest in a top tier venture manager, they're going to invest in 10, 20, 50, 100 names. So across that portfolio, you have a good chance of delivering a strong return. A lot of this was covered in Dave Swinson, who is the Yale CIO's book, Pioneering Portfolio Management, which brought kind of this idea of investing in alts a little bit more into the mainstream. But he said when you invest in venture, you really need to be in like the top quartile or top decile managers. So really like the best managers to make a good return. The median venture manager probably underperforms the S&P 500. Then if you look at private equity, much less likely to lose your investment in any particular company investment that they make. because they're investing in more mature companies. And you don't have to be quite as in the top decile or top quartile of managers to do well there. So each asset class has its own characteristics. This is where a good financial advisor can help clients really understand the risks, rewards of different asset classes, different managers, help them get access to the right managers. Because we're seeing a lot more of this like pooling of capital where it might not be KKR taking individual checks, but an advisor like a New Edge might pool client capital to go invest in a KKR or someone like that.
Okay. Yeah, so there's risk return dynamics across all these. Sorry, I had a question, then I forgot it.
Okay.
Yeah, that's interesting. So you've been working on it for 8 years or so. And I saw a recent LinkedIn post where you like doubled AUM in 2025, I believe, from like 180 to 360. What are the kinds of RIAs or firms that are a good fit for Arch?
Yeah, and we're working with people that are at the beginning of their alts journey, and maybe they're making their first dozen commitments or first 100 commitments across their clients. And then we're working with firms that have tens of thousands of investments and are serving sometimes hundreds or thousands of clients. Some of our firms focus on mass affluent or high net worth clients. Some focus on like high, ultra high net worth and family office clients. So we have a kind of good mix of the types of folks that can use us. And we work with a couple large global banks and 8 of the top 20 accounting firms. The big is it's a very defined problem. Either you have lots of private market investments that need to be tracked and priced and built on in your various systems, in which case we can be a very useful tool for you, or you don't have that problem. And if you don't have that problem, someday you might. So we're continuing to develop solutions to help folks that are at the beginning of their journey within private markets.
Okay. Yeah, so that was my question. So you help with the data and the reporting and the consolidation of that kind of information. But do you also have like a database of all the available investments and like the pros and cons of each and like matching the newer investors with these kind of investments?
We don't help on that side today. So when folks are looking
Okay.
for access, there's a few companies that focus specifically on access to private markets and are a little bit more private marketplaces, which is a job that a lot of the large banks and RIAs will do in themselves or in partnership with some of those companies as well.
Okay. So you're more after the fact, like they've already invested in some private investments and you're helping to report on.
Yep, exactly.
Do you feed that data into like the portfolio management software like the Orions and Advisons and Adapars, or is it kind of they report on that separately from their other public investments?
We do. So back to kind of the Schwab example, it's like public markets are tracked in Schwab, private markets are tracked in Arch, and then in both cases, that data would flow to their Orion system or whatever system
Okay.
they're using for total portfolio management. So we have defined integrations with a number of providers, including Orion, and then we also have an API that newer providers can write to get data out of Arch and into those systems.
Okay. Cool. No, sorry if these are more basic questions. I'm just trying to get like the lay of the land for this.
No,
Um,
these are important questions. Because also one thing that we believe is there like ideally in the world, if you could have one solution that does everything for you, that'd be great. But that doesn't exist today. And so we think that we need to support this best in class ecosystem. Folks already have a reporting system or a way that they manage their documents or a way that they interact with their clients. And so we just need to fit within that current paradigm and be a very easy to implement and easy to manage tool that feeds high quality data into their other tools, making their life easier and helping them solve this part of their tech stack and this problem within their client service.
yeah. Do you work with any like family office specific aggregation tools? 'Cause it almost feels like there's some tech solutions specifically for family offices that are not necessarily the same as the ones designed for RIAs.
Yeah, we do like a couple of names on that side. We just launched a partnership with Archway, which has been in the family office space for a long time and went public or went no, didn't go public, went private, or was carved out of their past home. We work with Aseta and a few of these other new accounting tools. And so we're very open ecosystem on that side of allowing people to write to our API and helping folks get data into the other tools that they're using as well.
Okay, cool. What I heard a little bit of your story of like why you were interested in this category, but do you mind sharing like what led you to build a company in this category specifically?
Yeah, absolutely. So I worked at an RIA in college and saw a lot of like what it's like to do the back office work and how do you serve clients and what do clients need. And then had a few other financial services experiences and pitched this idea that I just coming back to where it's like, why is there no, at the time I was thinking E-Trade for private markets. It's like you can go into E-Trade, open an account in a few minutes, and then access markets and manage your investments. And there's nothing like that to access the investments within private markets. Pitched this idea to an investor in 2017. His face lit up because he was like, I have 100 K1 generating investments. This is really painful for me. If you want to solve this problem, I would love to back this, and you should meet these two engineers because they're interested in a similar problem. So that's how I met my two co-founders, Jason and Joel, and then we started building the early versions of Arch in 2017, doing a lot of calls, understanding is there a market here, and formally launched the company almost 8 years ago to the day.
Okay. What I'm interested I read a lot about AdvisorTech and I'm interested in like the makeup of a founding team. Like you've clearly got to have somebody that's good at coding or understands like the software side of things and then you've got to have someone that understands like the problem that's being solved. Do you typically see founding teams have like some of each and then maybe like a more go to market focused person or what makes a good founding team?
Yeah, I think especially in this space, you really have to have the technical core at what you're doing because it's easy to come and say, okay, I'm going to go vibe code an application or create something. But if you don't construct something in the right way, it won't be constructed for scale. It won't be efficient. It won't be secure. And it's building software is hard. And you need great engineers to build software to build something that can be used by hundreds, thousands, tens of thousands, or potentially millions of people. Um, so that's what my two co-founders, Jason and Joel, played that role of building the early piece of the application. But it was a really collaborative process, and I was out selling the product and talking to customers and being like, okay, what is Arch version one? Arch version one collected our clients K1s for them, which if you're not familiar with the K1, it's tax document that private equity firms and real estate investments send to their investors instead of a 1099 because it's taxed a little bit differently. And so we had this solution for collecting K1s. We go to an investor, say, hey, we have this solution. It'll save you time. Do you want Arch? It'll collect all your K1s. And then people would be like, oh, that's interesting. I would like that if you could have this download all button because my accountant needs to download all the tax documents together. So then we'd build the download all button. Then we go pitch someone else and they'd say, oh, I would love that, except this only solves part of my problem because I'm not just getting my K1 from my managers, I'm getting all the documents. So then we were like, okay, yeah, well, we should go get all the documents. And in each of those conversations, we were logging different aspects of customer demand. So it's like, okay, how many people want the download all button versus the collect all documents button versus the digitize the documents once you collect them. And then we were prioritizing what to build based on what we thought would help us sell the next clients or sell our product in a faster way. So that's what we've basically been doing over the last 8 years is collecting customer feedback. We partner really closely with our current customers and prospects around what do you need to make private markets a one-click experience and an easy and delightful experience, and how can we be the solution to your private market problems?
Yeah. So was the early version like using more machine learning or how was it pulling the data off the documents? And then has AI affected that now that like LLMs are a lot more widespread?
Yeah, for sure. I mean, the early version, the first 3 to 6 months was like me reaching out to a manager, being like, "Hey, do you have this document?" And we really learned the whole process end to end manually before we started automating the process.
Sure.
AI is a great tool for us to have in our toolkit because AI can do a lot of things that the other technology we were using couldn't do. So we really started automating kind of right at the time that AI was coming out, and so we've been AI native from an automation perspective. But there's a lot of things that AI is not great at today, which we're leveraging other solutions for. And ultimately, like the need for AI in this market is because upstream something has failed or like there isn't the right infrastructure. So ultimately, we think we can create better infrastructure for the market, and then there's still a lot of great AI applications, especially around analysis of unstructured information.
Sure. So you've got a bunch of PDFs, and the PDFs are like organized by households, I assume, or by investments. And then you're pulling data out of the PDFs, and then I assume you're like stringing this data together in some kind of dashboard to show like returns over time. Is that the basics of it?
Yep, exactly. And you can log in and see how's my portfolio doing. You can search for keywords like how much SpaceX do I have in my portfolio, and you can get a summary from Arch every day.
Okay. So, but SpaceX, sorry, I should know this probably, but I don't know. Is that a private company or is that a public company?
Yes, SpaceX is currently a private company.
Okay.
Um, they are likely to go public later this year, and it's a massive private company that has been syndicated pretty widely. So there's a lot of people that own SpaceX through a fund or through an SPV, as a special purpose vehicle. And so we help the advisor and the investor often know, okay, what do I actually own through these funds? Because if you invest in a fund, it's like you're investing in someone to with their discretion make good investments on your behalf around a particular strategy. But you might at the end of the day not know what they actually invested in. So we help people understand the underlying exposure of their investments. And then that allows you to make decisions. So when SpaceX is going public, you can then decide, okay, how much SpaceX do I currently own? Do I believe in the company? And am I overweight or underweight? And based on my exposure, I can decide whether to invest or potentially sell at the IPO.
So you can own SpaceX privately directly, or you can own a fund of private companies, almost like a private ETF. Is that the right language for it? Or
Um, y- yeah, maybe it's a little bit different than a private ETF, although like I think that there are some instances of that, and private ETFs could come in the future. But yeah, you can own it directly. You can own it through funds, and through fund of ones, where sometimes someone will raise a fund just to go purchase private shares. It's often called an SPV.
okay. And who originally you mentioned there's a couple companies that do this, but like who originally introduces the investor to the fund? Is that something that like the person raising the fund sets up?
Yeah, a lot, and there's a few intermediaries in that space as well. But oftentimes it's like, okay, a company is fundraising, they'll go pitch funds. Some of the funds will decide to direct with their funds. There might be individuals are like, okay, I don't have a fund, but this is a compelling company. I'm gonna commit to invest $5 million in this company and then go raise the money for it. And they'll often take a management fee and carry usually somewhere in like the 10 to 20% range to run that vehicle and to go raise the capital. So there's one of the great things about capitalism. There's a lot of business models that will pop up in order
Sure.
to connect opportunities to those people that want to invest in those opportunities.
Yeah, no, I think that is true. Wherever there is a gap in value, there will be people trying to to identify that gap and close the gap.
Yeah, exactly.
What's your vision for Arch overall? Like, do you have any short-term, long-term goals? Both just, growing, but are there any like goals alongside that around, I don't know, more like making the world better type goals?
Yeah, great question. Well, the first one is like whenever you're doing a startup, it's like don't die. That's the number one thing. So we've
Don't
been
die.
very
That's
conservative.
good.
Oh yeah, that we've raised. And so these are a little bit more philosophical. So then it's like don't die. Get 1% better every day, because then we can have a big impact. And we're really focused on client outcomes over a long period of time. So it's why we're able to invest in future technology and really care a lot long term about our clients, because we want to be around in decades and want to be able to have a big impact on how our clients are able to manage their investments and hopefully allocate capital. We think of it as kind of this pyramid of what are we doing? Well, at the base layer, it's like Maslow's hierarchy. We're saving people time. Then we're giving them better data that they can use in their different systems for reporting, billing, and other things. But out of that data, we can give them better insights on their investments, which hopefully lead to better decisions. So if we do our job right, not only are we saving people time, but we're actually giving them tools to make better decisions and have better investment outcomes. And that's like the ultimate goal. Be a solution that our clients trust, that they love working with, that they feel heard, that they feel like we will take their feedback and innovate on it, and that we can continue to make a bigger and bigger impact on our clients year over year.
Yeah, no, that's cool. No, I like sometimes I like the philosophical reasons more than the there's a fantastic podcast with Tony Robbins and Alex Hormozy. I don't know if you've seen it or Tony's been on a zillion podcasts in the past month,
Yeah,
but Alex Hormozy just sold his book, the $100 Million Money Models book. I'm sure you're familiar or maybe not, but and he made like $100 million selling the $100 million book within a day or two.
that's
Um,
awesome.
but he's like talking to Tony and like he's like, "It doesn't make me happy. Like, I'm very successful helping a lot of people, but it doesn't make me happy at all." And so I think Tony did a really good job, like, saying you need to connect to an impact that you care about that's bigger than you to find the happiness that you're seeking, which is pretty cool.
Yeah, and we genuinely love what we do. Like, I love showing up to work every day. I love talking to clients. I love being able to, like, take an idea and turn it into something that we can then deliver back to the client and hopefully solve a problem. And it's really fun. Unfortunately, there's not enough hours in the day to get everything done we want to do, and not enough days in the week. And I get like sad when it comes to Thursday or Friday because like, oh no, the like actual week's over and people are going to stop responding to my emails. But like what we get to do is fun. Like we have so much potential and so much left to do.
It's a real problem. I don't think people talk about this, but, like, on LinkedIn, there's, like, certain times of the week where it's just dead. Like, people aren't hanging out on LinkedIn very much. And same thing with email. Like, there's certain days of the week, certain times of the week where, like, nobody's responding to emails. I'm sure there's been research done on this, but it is interesting. Obviously, the more you pump out, the more you'll find those outliers that are, like, responding to emails at 9 p.m. on a Friday night, but, like, most people are not responding to emails 9 p.m. on a Friday night.
Yeah, Friday evening is a great time for email. Saturday afternoon is a great time for email. People just haven't realized that yet.
They're too busy watching Netflix or something, I don't know what.
Yeah.
Um, so these things are cool, so don't die, and you mentioned, like, over-raising. Is over-raising a problem for a lot of startups?
Yeah, because I think a lot of times, like, if you raise capital, people feel that burns a hole in their pocket and they, like, need to spend it. We raised $500,000, like, we first started the company, and 3 years later, we'd spent about half of that. So we were, like, super capital efficient from the very beginning and, like, didn't spend money on anything. We were just, like, trying to make sure that we could get to product market fit before we ran through the initial funding. But a lot of companies operate very differently. So companies will raise millions of dollars when they first start, and before they have product market fit, they're investing in sales, they're investing in marketing, they're out there selling a product and potentially selling something that doesn't exist. Um, and there's a lot of ways to like build something successful. This is just kind of our path of be really conservative, be tech first, and then support second, and then sales is only like third. And so that's been our path since the beginning.
Yeah, no, and I'm learning more and more, like, Silicon Valley, there are a lot of companies, like, selling things that don't exist yet or even selling things that aren't even possible yet, but they're literally just selling the vision and hoping people will buy into the vision and then keep paying them until it becomes real.
Yeah, exactly. And that does work. There's a certain amount of companies that create the thing and it's real and it's great. And there's a certain number of companies that don't end up creating the thing. And then you end up with uh, a vision that was never realized.
Yeah. Um, no, that's cool that you spent it that slowly. That's really interesting. I think a lot of people they raise money and then they try to spend it as fast as they can so that they can go raise more money. But then you're just kind of like then you're almost you get way too big before there's like any foundation built, and then you've got a serious problem.
Yep.
Because the product might not even work yet, but yet you've sold it a ton of times, and then you're just left with like a bunch of very unhappy customers.
Yeah. Yeah, exactly.
Um, anything else you've learned just from the startup and raising money perspective?
Yeah, but I think it's amazing today. There's so many great podcasts and resources out there, like this one, and so you can learn so much from entrepreneurs in your field, entrepreneurs in different fields. Like whenever I'm walking to work, if I don't have a client to call or maybe a family member to call, I'll listen to a podcast or listen to something because I feel like you can just like find inspiration in all these orthogonal ways and find ideas that are out there on how you can build and innovate. So that's something I really love. And been thinking a lot lately about just like the things that you do if you're building habits, like having those habits be things that are enjoyable makes them easier to develop. So whether it's like the gym, which is a habit that I'm trying to build, or others, it's like if you go and enjoy that thing, then it can become a much stickier part of your day. And so I've been thinking about that of like, how do I make myself enjoy certain parts of the work that are really important and then make sure that those things get prioritized accordingly.
For sure. Are there podcasts or like famous VCs you enjoy listening to, um, that you consistently like get value from?
Yeah, I mean, outside of yours, of course, the Knowledge Project by Shane Parrish is one of my favorites, and then I love the Acquired podcast.
Cool. Nice. Yeah, no, so I recently started or became aware of like Harry Stebbings, and so I've listened to some
Yeah.
more of his stuff. He's got like the 20 VC, and then there's like the TBPN show, which is
Mm.
like the startup show. I don't actually watch it, but I started watching it a couple days, and I was like, I don't think I need to watch this 3 hours a day or whatever it is.
There's a lot of content out there. But yeah, I agree. Harry Stemming is great. I just listened to an interview that he did where people were interviewing him about his path, and he had a great path. He like really hustled um, to build his podcast and media brand, and then that's led to like so many other businesses. So I feel like a lot of entrepreneurship is just like then same thing with like any job. It's like find one thing, do it really well. Then if you do things well in this world, people will give you more work to do. And so then it's just like leaning into those additional opportunities.
Yeah, no, for sure. And I think Stephen Bartlett with the Diary of the CEO podcast, same thing. I mean, he built a super successful podcast, interviewed a bunch of very interesting people, and then now he's like into investing in companies and stuff. Um,
Mm.
so it is an interesting path to take. What how have like conversations with prospects, early clients, maybe even before you had a product, like how did you run those conversations and how did those conversations lead to the decisions and the deciding what to focus on?
Yeah. Well, it's still similar to this day where we'll talk to people and if what we have today isn't what they need, it's really an investigation of like, what do you need? What are your business problems? Like, how do we solve your problems? What matters to you? What do you care about? And then understanding, okay, like here's what we do today that can solve your problems, but also here's where we're going, where we feel like we are going to be the longest serving solution in our space. Just because like we really care about this, have our heart in this. We're 8 years in, and we like love this and want to do this for decades. So might not solve all of our clients' problems today. They might also want us to collect their 1099s, which we're starting to do now, or they might want us to handle other parts of their process. And so understanding that feedback is super valuable because then we can say, okay, great. Like, well, today we can support you with this way. And then tomorrow we'll add this. And then the next day we'll add this. And here's how we can be a reliable partner for you in the future. And that kind of helps us be a good long term partner for the firms we serve.
Yeah. No, that makes sense. I've been thinking a lot about AI and like what AI is, especially as it relates to human financial advisors, because it's like AI financial advisors can get more designations, can respond faster, can be more empathetic. Like AI financial advisors can do a better job in many ways than a human financial advisor. So what is the part of the human financial advisor relationship that is valuable, in your opinion?
Yeah. Well, I think the human touch is always important to have someone that hears you, understands your goals, and helps you figure out which button to press. There's so many buttons to press in our world. Like you can go do most things that an advisor can do for you on your own. You can go buy insurance, you can do financial planning, you can go trade stocks. But I think it's really helpful to have someone that advises you, understands your goals, and helps you say, okay, like, yes, the market's going down, but like here's some of the data on even when markets go down, if you hold your stocks through the downturn, you'll end up better off on the other side. Or Okay, talk about your financial goals. You have kids. What do you want your kids to do? Do you need to start saving for college? Here are some of the options. And it's an advisor's job to like understand what all the options are and where they can coach their clients. And then, similar to what we were talking about before, they bridge that gap between opportunities and actions and help clients figure out, okay, like based on my goals, here's what I should do. And advisors can help clients feel confident in those financial decisions, which I think is super helpful.
Yeah, no, for sure. It's like the relatability. Like AI's never done anything, it's never experienced anything, so it can't relate emotionally to another human being. Um,
Yeah.
which is super interesting.
Yeah,
Cool.
but it's helpful when you, like, listen to a podcast and they talk about K1s, you're like, "What is a K1?" Then you can type into your AI, you can do this in Google too, but you can just type into ChatGPT and get, like, great descriptions and ask questions, and it's great for that kind of learning. So I think that that's pretty useful as well.
Yeah, and apparently K1s are something rich people have, and I don't have a lot of, so maybe I need to go and seek K1s, right?
Yeah, well, they're painful, so I wouldn't just seek K1s to get K1s. It's kind of like a symptom of something that could be good. Um, but but yeah.
No, I liked what your comment was earlier. Like AI is solving a lot of problems. Like there's AI is solving a lot of symptoms, but not the underlying problem. So I think that
Mhm.
especially around advisor tech, like AI, especially the stuff that's like growing super fast, maybe the note takers and the prospectors, like they're solving a symptom of bad organic growth. They're not actually solving organic growth.
Yeah.
And so I think that that's the the tech companies that last for decades, like you've talked about, like they're actually solving the underlying problem. They're not solving a symptom.
Yeah, exactly. So that's where when we talk to customers, we really try to dive into like, what is the root of your problems? Why do you have these problems? Are they going to get better or worse? Is technology helping or hurting? And when we first started the company, we heard that like technology had made a lot of our clients' lives worse, not better. They used to get statements mailed to them, and they're much easier to interact with than the statements were posted to portals. Why do I have to log into each private equity firm's website to invest in private equity? That seems crazy. Why don't I have Schwab for private markets? So that's like that's ultimately what we're building and looking to bring to the markets.
Yeah, that's cool. Great. If someone's interested in learning more about what you do or signing up, where's the best place to go?
Yeah, we are at arch.com. And then we're on LinkedIn also, Arch, and kind of on other social handles as well.
Sweet. Any specific meaning behind the name Arch? Maybe I should have asked this earlier, but it just came to me now. So
Yeah, we spent 3 days at the beginning of the company figuring out a name. And it was like everything from like what are things that look like words but aren't words, and then what are
okay.
things that are words but aren't popular words because we're trying to figure out what domain could we buy for not that much money since we were like pretty cash conservative at the beginning, especially. Um, and one of the words we were smashing together and trying to kind of create meaning out of was arch. We kind of looked at it and we brought it to one of our advisors. We're like, wait, we really like arch because arches are these like timeless, enduring features. They are really strong. They're often like kind of like there, but you don't notice them, and they're holding up infrastructure, helping people get water to far flung places. And was a word that we just like really liked, so we latched onto it and became Arch, and haven't looked back since.
No, that's cool. No, and it's also like a bridge from like one location to another over a body of water typically or a road or something that you can't just walk right across.
Yeah, exactly.
Cool. All right. Well, thanks Ryan for coming on today. I'm excited to get this out in the public.
Likewise. Thanks, Joe. Great chatting with you.
All right. Talk to you later. Bye bye.